What's up, guys? It's July 8th, 2025. Hope you're doing good. Didn't get too beat up today. I didn't place any trades. I was dry trading while I was at work. I was just like drawing fibs and seeing if I can get a second leg. And I'd be about break even today. Today was a tight trading range. We don't get these days too often, so I'm glad it's out the way now. I want to give a quick shout out to the members and subscribers. If you're interested in joining the membership, hit the join below next to price action breakdowns, and I go over how I enter trades, how I exit trades, profitable trades and losing trades, and when I'm taking trades, where trap traders are, and just a little more detailed things about how I find trades. I talk about those trades in these breakdowns, but the memberships will have the P&L floating, and you guys will see a different angle from everything. So, yeah, let's get into it. Weekly chart, daily chart. We are at all-time highs, and now we're going sideways. Just because we're going sideways doesn't really mean we're going to reverse. I do see 3 pushes up as a wedge top, but from a more short-term perspective, I see 3 bars in a row, strong to get second leg. Problem with that is this is within the third leg, so leg 1, pull back, leg 2, pull back, leg 3. Or you could say even from here, leg 1, pull back, leg 2, pull back, leg 3. However you decide to count, we need to acknowledge that this is the bigger, this third leg is bigger than the other couple legs. So I'm going to take the entire third leg and measure it down here, down. So ignore the top line. I'm just measuring it. I can move it. So bigger than the second leg. About the same size as this leg if you want to count that as leg 1. And then if you count the first leg from down here, the first leg's bigger. So it's not that bad, actually. I thought it would be bigger, but it is bigger than the second leg. And there's a gap here. We didn't have a gap within the second leg right here. So that's interesting to see if bulls can keep this gap open. If bulls keep the gap open, that lets us know that they're trapped bears and they're going to be trying to buy back shorts for a loss and adding to the bull pressure. That's how I trade. I look for trap traders, and right now I just play the 50% pullback. I place my limit where at the 50% pullback. That's where the trap traders get out, and that will cause a surge in one direction. We're going to see that trade fail a few times today. That's a momentum trade, and today was trading range behavior. Well, actually I said that wrong. That was a leg 1 pullback, leg 2 setup. Because momentum could mean in one direction, yeah, or momentum can mean like this. Like this is also considered momentum. Momentum is like energy going one way that can't be stopped or something. I need to look up the actual definition of it, but like this is considered momentum. Okay, this is a type of momentum too, and this is considered momentum. So that's what I was trying to say. Daily chart, and then we're just going to look at these 2 legs on the daily chart. Leg 1, pull back, leg 2, pull back, leg 3. These small bars are still bull bodies, but they're pauses. So leg 1, pause, leg 2, pause, leg 3. This is the first trend line break, so I think that's interesting because this is generally a better fade, but we could also be in a wedge top. So here's a wedge top, and then here's a wedge top. So that would explain today's price action, right? Because we have a big up, but we're coming right into resistance. And look at the price action. Bulls were buying lows, but not willing to hold high. Bears were shorting highs, but not willing to hold short. I want to talk about trading systems. So I'm a systematic trader. I like to trade one thing. Systems teach us how to trade the market. So a system doesn't necessarily mean we enter at the same place every time. For me, that's how I'm interpreting it. But a system in a more broad context could be we only trade leg 2s. So you have a way to trade leg 2s in a trading range. You have a way to trade leg 2s in a tight small pullback trend. You have a way to trade a leg 2 in a broad channel. And the system is you trade leg 2s. Or you could say, hey, I only want to trade channels and trading ranges at the 50% pullback, and that's my system. So there's different ways to view or interpret the system, but what's important is that we trade a system because it'll teach us about the markets. these last couple of weeks I've been really focused on trap traders, and today made me realize each part of the market cycle has a different type of trap. Well, each part of the market cycle, the trap traders are getting out at different spots. So if we see a strong breakout, trap traders will just have to hit out for a loss. But that's not a good breakout. Here's a breakout. So bears that short here, they have to hit out for a loss. Then we enter the channel phase after here because it's breakout channel trading range up here. So now bears short here, they're trapped. They're going to short more here, and they're going to look. So now, my system works better in the channel and trading range phase. Whereas here, bears that shorted this bar 1, look, maybe they go like right here. The leg 2 started here, so it's a leg 1, pull back, leg 2. Bears were taking a loss. They short here and they're forced to take a loss. So trap traders were buying back quickly, caused a surge. In the channel phase, trap traders have an opportunity to get out break even. That's where I place my limit orders at the break even spot. So bear short here, bear short up here. The break even price is 50%. I place my limit order there and I get my second leg. In the trading range phase, which brings me to today's topic, was why I was thinking about it. Trap traders are at highs and lows. So if you want to catch a second leg of this leg right down here, you got to put the limit order up here. If you want to catch a second leg of this bull leg, you got to put the limit order somewhere down here, which is, I don't trade support. How do I say this? I don't really trade supply and demand zones, but I'm just drawing this so we can have a visual idea of what I'm talking about. This is pretty much the box in today's range. Sellers at highs, buyers at lows. Look, you want to catch a second leg down here, you're going to put your order here. You want to catch a second leg up here, you're going to put your order somewhere down here with a wide stop. And a wide stop, per the Al Brooks definition, is 1R. Or, doesn't have to be. Well, yeah, it is. It's 1R. That doesn't mean you're going to let your stop get hit. So you put your order down here and your stop somewhere down here, and you're going to make 1R going long before you make 1R short because it's your trading range. So in trading ranges, traders are getting trapped at the edges. In channels, traders are getting trapped at the pullbacks, which they're hoping for a reversal. In a breakout, traders are getting trapped right away and they have to buy back. In this case, buy back shorts. So I thought that was pretty interesting that, it's the system. I have one system. I've always been revolving around leg 2s. How I've entered has been changing over time. But nonetheless, the system is teaching me more about the markets. Not to say that I'm still going to do trade with me with Ali. I'm still going to look over Al's stuff. I still watch Brad's things from time to time. And they have so much to offer. But you also got to be able to let your experience teach you. So I just want to talk about that. And back to the whole system thing, full circle. If you're trading everything and trying to do everything, it's hard to pinpoint where you're going wrong because there's so many things you're doing right, there's so many things you're doing wrong, you don't know where to zoom in. Or if you only trade leg 2s, even if you only trade leg 2s today and you got stopped out, then maybe you can come to a realization that if you want to trade leg 2s in trading range, you have to wait for price to test the edges. Because there's a couple leg 2s that still worked, but it just wasn't like win after win after win. See, this leg 2, I would have got filled, that would have worked. I don't know if I would have taken these 3 bars. Knowing me, I most likely would have, unless there was news on bar 7. So that's a stop out. That's a win. And then look, I would get stopped out here too. I would look for a second leg up. My stop would be on bar 12. That's a full hit. And then it takes some time, but it does go to the target. Or maybe I missed that and I try the short again. If I don't scalp out within 15 minutes, that's a losing trade. I have one break even opportunity on bar 32. So I'm still looking for second legs, but the context would change a little bit. Here's a winning trade. Maybe, I don't know. I don't know if it doesn't look like I would get filled. Hard to say. It's always hard for me to say if I'm in a trader because I didn't take the trade. I don't know exactly what I would have done in the moment. Because it's really easy to talk about the markets once the bar's printed. Like that's not the point of what we're trying to do. What we're trying to do is trade while it's printing. There's a winning trade, 2 bars and a pullback. So it's I would have had about a break-even trade. Maybe put the trade right around there. There's another winning trade. I don't know. Sometimes when my target gets hit, so bar 46 hit my target, probably get filled. Maybe I'm not in that trade on 48, 49 to take that winning trade. So I don't know what would happen there. But what I'm trying to get at is usually the system has, it's a scalping system, so I expect to win more than I lose. And when I do lose, it's a little bit, it's like it takes me one trade to recover. But a scalping system generally should have a high win rate. And today that win rate was diminished because we're not in a trending environment. Look, here's another losing trade. Looking for a second leg of that bull channel. And then here's a winning trade, second leg of this bear channel. And then we approach bar 72. There's another winning trade I just spotted, but it's a third leg down. So, you know, maybe I would have been profitable by maybe 1 or 2 winners today, but anyways, that's my spiel on why it's more important to trade systems than discretionary trading. Gap up, bar 1, big bear bar, shot to get second leg. However, bulls are buying it and they actually make 1R before bears. So what I mean by that is bears that short bar 1 can't make 1R. Bulls that buy bar 1 make 1R. They fade it to the high, that's 1R. I'm going to go through this a little bit faster because I like to keep them under 20 minutes. 3 bars in a row with a gap. Trading ranges, gaps get closed. So if you had a hard time with today's context, think about that. Here we go. 3 bars in a row. Maybe it's trying to get second leg. Bar 4 has a bad follow through and it's not closing far past bar 1's high. Bar 5, bad follow through for the 3 bars. Starts to pull back bar 6, deep pullback. If you buy the low here, there's a small bounce in bar 7, but then it sells off, trapping trapping bulls. Bulls are now trapped, being forced to sell out of longs. So bulls buy up here. They buy more down here maybe, and they almost get their break-even exit by maybe by 1 point they miss it. Sells out, shot to get second leg down. Now we have 3 or 4 legs lower. Bulls that possibly buy the high at 5, buy lower at 8 and 9. They get out at break even on bar 10, sells off for a second leg down 10 and 11. Bears that shorted the 11 low are now completely trapped. They had like maybe 30 seconds of profits within bar 12, so very hard for them to scalp out for a winning trade. And we know they're underwater with bar 13. Bears short higher on bar 14. Actually, so here's a good indication. Think back to yesterday's breakdown. I talked about what happens if people are making money on the opposite side of the 50% pullback. So bear short here, bear short higher, and they made money on 17. That lets us know we're in a trading range because bear shouldn't if this leg's going to get like 2, bear shouldn't be making money by bar 17. But they make even a tick past their entry. So they short down here. Bar 12 is the weak bears that short. They short higher, and look, bar 18's tail goes below bar 12. So bears made a point on their original entry. Not good for bulls. 18, 19, 20. 3 bars in a row, shot to get second leg. Do the exercise again. Bears short the low of 18. They short the high of 20, 21. 50% pullbacks here. They make a little bit of money. They buy back shorts, and that causes the second leg for bulls. Leg 1, pullback, leg 2. So here's a leg 1, pullback, delayed second leg, leg 2. And they're not the same size, trading range behavior. Now the leg 2 for here creates another leg up. How do I say this? The leg 1, pullback, leg 2 here. This leg 2 shot to get its own second leg, and it does. So bears that short the low of 24, we're going to short higher around the double top of 30 and 31. They almost get their break even, buys back, and you can see bears are buying back eagerly because bulls are buying the EMA. Where bulls are trying to break above the higher time frame EMA. Bears were trapped, 3 types of traders buying one thing. Bam, we get a surge in one direction. Now we have a wedge top. And I'm not drawing the gaps in, but there are gaps. I'll point them out after just to let us. I'll just do it real quick. This gap got closed on the opposite side. This gap gets closed. That's a 0 height gap. This gap is now closed. There's a gap here. It's closed. So look, so we have all these open gaps and then it closes and it rallies. Gap here, even this gap looks like it's strong to get second leg, but it's climactic and bulls have had multiple legs higher. Oops. What am I doing? Hold on, my keyboard's tweaking. There we go. Leg 1, pull back. Leg 2, pull back. Leg 3. Climatic, wedge tops. Sells off for 2 to 3 legs down. Leg 1, pull back. Leg 2, pull back. Leg 3. Gaps get closed, so bulls that bought the high of 36, they buy more on the low of 38. Rallies to the 50% mark. Bulls sell out of longs, bears short the 50% mark. Bulls that shorted 37 want to add to their winning position. They scalped out, now they want to re-enter. Second leg traders are looking for a second leg down, and we cash that second leg down here. Same situation goes for the next bear channel down. Strong to get second leg down. The bulls that bought the high of 39 buy more here. They get out a break even on 49. You can see it rallies and it sells off. There's also a hidden leg I missed right here. So you could say leg 1, pull back leg 2, pull back leg 3. And then this leg that 49 profits from this leg 1, pull back leg 2 was actually the pullback from a leg 1, pull back leg 2. So we see this, there's a bull channel hidden here from the 46 to the 49 high. We're looking for a second leg of that because we understand fractal price action. Bears short the low of 46. They short the high of 48, 49. Exit for a quick point of profit on 49. And then it rallies for a second leg up 50 through 54. Bulls now have a double top here. The bulls that buy here buy more lower. They get out here at the break-even price. That's what creates a double top. And it sells off for the rest of the day. Enough bear momentum down, 3 bars in a row. The bulls that sell the 57, the bulls that bought the 57 high buy the 61 low. Get out at break even here, sells off 63, 64, hits our target. Then we don't have 2 bars in a row, so I don't trade 2 bars in a row, but that dynamic works. So the bulls that bought the high of 62 buy more 64. They get out at the 50% mark of 63. You guys see why I'm becoming more zoned in on this 50% pullback? It works in many different environments. It's just how can we frame the trade to cash that second leg? Because I'll be honest with you, when I was at work today, I did not catch this bull leg here, but now I can sit down and look at the charts. There's a hidden leg here that got its second leg right around here. So that's great. And then there's that 1 bar 50% pullback scalp. Something I experimented with that when I was playing around with 50% pullback, but it's not worth the time. But I do want to do another, I want to build an indicator. It's easy to build an indicator in Claude that has bull bars that close above the 80% of their high. So what I'm looking for is a bar like 26, how it has a tail and closes on its high. So I know bears shorter down here now trapped. Same dynamic, and I scalped the 50% mark. 1-to-1. Let's see if it worked. Let's just see. Let me delete that gap. I don't know. I don't think I would get filled on 27 because it's bigger than point. So that's a quick trade. That's a quick scalp I'm looking to take down the line. I'm still working on 50% pullback with 2+ bars. 4 bars in a row, bear channel, lots of overlap. We're around the swing low, but you can see that the bulls that bought 65 buy more low on 69, out on or sell out on 70, and my stop wouldn't get hit, but I don't know if I would hold through 72. If I held through 72, my target would get hit on 75. So, just about 20 minutes, guys. Hope you guys had a good one. Hope you didn't get too beat up today. Tough trading range day. Hopefully the week is nice for us. What do we got? Wednesday, Thursday, Friday. I've been looking to trade tomorrow. My schedules. Yeah, you guys know about my schedule. Anyways, appreciate your time. If you learned something, share a show. Don't be a hoe, and I'll talk to you guys later. Thank you. Bye.